Thank you, everybody, for joining us today for this wonderful conversation with Sop today. It's really exciting to have this in Dallas WealthTech conference. I was actually suited up with my jacket and everything. Sop turned out like this, and I decided to roll up my sleeves and join the regulator. The other thing is that when we were chatting outside, two of our client advisors approached us. And so I was asking Sop whether he'd opened an account and whether he needs help from our client advisors. What was your response, Sop?
I told, be careful what you're asking for. And I have a reason for that.
Yeah.
I have a reason for that.
What is that?
It's a very, even the reason why I think you exist is for that reason only.
Okay.
During the I have two wealth accounts in two banks here. One is a foreign bank, one is a local bank. And the foreign bank during crisis, 3 years, didn't call me once. Till now, has not called me once. And I guess for good reasons. They think I'm a long-term investor.
Obviously.
So I don't worry about market issues. I should know how to deal with this.
That's right.
So they're truly following my signature, which I signed, I guess. I'm a long-term investor. I can take maybe 80% wipe out of my wealth before they call me on the trigger. And the local bank, for some reason, called me not because they wanted to call me, because I went and complained about their app, the wealth app.
As the fintech head, you should.
Yeah, and the reason I actually called because they're not giving attention to me. So the best way is to complain about their app. And I went and pointed out, I can make a head and tail out of your balance is showing sometimes shows positive, sometimes negative. Maybe you're doing something good.
Yeah.
And after a lot of complaint, they called me. Then I told no, I'm going to come to your office and help you to design this app. So that it works for me.
You volunteered your services to improve the user experience.
So I thought the reason I was putting this, because I thought it will cause some embarrassment. A real thing, what I wanted is to talk about my investment. Okay? Yes. So finally I got them there, and they sold me a few more.
Investment products.
Yes.
Push you some funds.
Yeah, this is going to help you to offset some of your massive losses. Okay, so, and I told, can you call me at least once in a month? And they're still trying to call, but I don't think they got that.
Yeah, they didn't get the message.
Compared to my third channel, a small like financial advisor, that chap calls me every month and gives me, okay, I'll move your cash to this. No, I mean, I feel good about it. At least the guy calls and talks to me. And somehow I feel more comfortable with this guy calling me once in a month.
That's fantastic.
And it truly shows why you should exist.
Why you need advice.
And why you should exist as an alternate provider.
Right. Because
one doesn't call me for 3 years, and other I found a way to. So before your two lovely agents call me, they better ensure that they call me
there for you.
Once in a month.
Absolutely.
Minimally.
But the experience is not something that's unusual for most people here in Singapore. And
yes.
One of the reasons why, Dallas has embarked on this journey.
Yes.
Right? Because I think the wealth tech space is a space where, there's been very little technology adoption. And it's a very sophisticated part of the business. So it's a business that traditional banks, whether it's, commercial banks or brokers, don't do well. Because I think the way it's set up, a lot of these banks are very transactional, and brokers too.
Yes.
So when you're transactional, they're doing what they did to you, which is try to push you one product, sell you a fund.
And insult to the injury, they called me that you have a custodial fee of $1,500 to pay.
Okay, we'll talk about fees later. But it's a structural problem, and that's why we need to tackle it from a systematic perspective. Yes. And I think technology obviously provides us with a lot of opportunities. Whenever we move an industry like the wealth industry from an offline experience to an online experience, the two most important things are exactly what you said.
Yes.
The user experience and cost.
I think more basic, they don't even call.
They don't even call.
They just don't even call.
I can guarantee you that Endow's advisors are going to be.
And I don't mean that they will call me a telephone. At least some email, nothing. For 3 years, this global bank, no email, no call. They don't know that I exist in their system anymore.
That's right. Well, I'm going to move on quickly because, no, I'm just kidding. No, but this is really important. One of my claims to fame recently is I went on a podcast and they asked me if there was one thing you would change, what would it be? And I said, I would ban all banks from providing wealth services. And the reason why I say something so like dramatic and almost, is melodramatic and almost sensational is because of the experience that I've had personally using my commercial banks, my ex-company, I won't name, but, I didn't enjoy the experience and it was very costly.
Yes.
And they don't provide good advice. And so the advice and being able to provide that advice at scale through technology is critically important for success, I think. Yeah. And to make Sop happy.
No, not me, not me happy, because let me take the third one.
Yeah.
The small financial advisor. If he has access to technology, he had three knee surgery, still calling me once in a month.
Oh, wow.
So the thing is that if they has the right access to technology, I think he can be far more efficient.
Absolutely.
So having that lack of access to good platform, good infrastructure, perhaps these banks don't call.
Yep.
They're too overwhelmed with this volumes they have to deal with.
Yep.
And with 30% loss in your asset, you don't want to call your client, say, oh, sorry, long-term investor, be happy.
Okay. All right. My marketing guys are probably freaking out right now because this wasn't supposed to be the questions we were going to be talking about. But it's good. This is what a fireside chat is supposed to be.
I want to ensure audience here to hear this from me. I suffered during COVID a lack of empathy from the wealth advisor.
Yeah.
Absolutely zero empathy. And they don't have the moral courage to call you and say, look, you lost 30%, there's a macro environmental change, but here are things we can help you to think differently.
Absolutely.
Zero. I think that's the problem we've got to fix together.
We're hearing it from our clients too. Our clients are saying that their private bankers avoiding their WhatsApp message. I mean, that's how bad things are.
Yes.
But okay, so we'll move on because this is more fun, guys, than listening to what the MAS strategy on digital assets is, right?
Yeah.
I think.
Yeah. You can understand how strategy is working.
Yeah, they can read the white papers that you guys publish and stuff.
Yeah, indeed.
So let's talk about the more interesting and fun stuff. Yes. But I did want to touch upon each of the subjects that we'll tackle today. So we threw out the original design and said, hey, we have 5 different panels today that's going to tackle private wealth or generational wealth. We're going to have ESG, sustainable investing. We're going to have wealth tech, technology. How do we adopt technology? And then the whole Web3 DeFi, how the next generation of investing, and then financial education and literacy, which is critical to achieve success for individuals and the society at large. So we're going to tackle each of these questions very, very quickly.
Yes.
And,
we have 23 minutes to go.
We have, how long do we have? 23 minutes.
Yes.
Okay, we'll leave some time for questions at the end. So I hope you enjoyed these conversations, as you have so far. So Singapore is the epicenter. It's the hub of wealth industry. But yet, these frustrations exist.
Yes.
What more needs to be done, especially with regards to technology, and how do you see it as technically you're also a regulator, but you're building an ecosystem, right?
Yes,
a financial technology, and wealth tech is a very important component of that. How do you see the landscape? How do you build that ecosystem in the right way?
If I look at the numbers, it does show that the sector itself is growing. If I look at the investment numbers of the wealth tech companies here, I think the KPMG report which came out today talks about some 900%. It looks 23 million was base, and this is 163 million in terms of investment. Percentage-wise, looks good. What it clearly shows that investors are interested to fund this space. That's one thing, which is very encouraging. Second thing, I think, which we got to figure out, a lot of the financial institution which is providing this wealth advisory, they need massive restructuring, redesign of the backend platform. And this is where wealth tech companies should come in and cut it out. And I was reading a note of Mambu, where's Ned here? Yeah. So he was complaining about a 6 to 9 month sales cycle, and which is exactly the issue. I think, how do we get this garbage pilot every time you do something? The pilot means what? So there's a real problem. You don't have to pilot a real problem, which you got to be fixed. So find out a way, which I think is missing in this space in Singapore, is that ability for wealth tech companies to really close an understanding with the banks here, or FIs and broadly speaking, so that we can have massive sectorial upgrade of our infrastructure, which serves the client in this market. And Singapore as a wealth hub has seen a massive growth in the assets which is coming out of here. I think between Hong Kong and Singapore, I think it's close to how much? 4 trillion of assets. And I think with let's say a couple of trillion here, the money is here. Investors are the wealthy customers are here. Not wealthy, the one below that, a million high net worth individuals are here. They got to have access to this tech stacks.
Yep.
And there's a second piece to me, which I think we got to work very hard to fix it. And third, I think the whole there has to be a reconfiguration of the people in that industry, how they think about client. In good times, a lot of calls. In bad time, they don't show up.
Yep.
And that's my frustration. If technology can help them to find a way to manage that relationship, build that process from wealth preservation to active market actions, or find a way to build that portfolio over time, it will be a big help for us.
Yeah.
But I can tell the industry is growing, the investors are interested, there's real money to be made in this market. Singapore being as a growing wealth hub does make it attractive for many wealth tech companies to come here. So I hope that grows.
Yep, absolutely. Fantastic. I'm also very impressed that you read the briefing docs and you read the KPMG report.
I have to know because it shows up in like that I have said something to that.
Yeah. So just a quick plug for the report though. We just published it this morning. So in Dallas, KPMG released the first Wealth Tech in Asia report, forecasting the future, but also what are the most important drivers of success in the wealth tech industry. And Sop kindly
I normally don't do open praise of consulting company, but this report was well done.
Yeah.
Not because I also had a picture there, but
it was also because Indalus is involved.
Okay. So ignore my picture there, rest is good.
So there's a lot of self-plugs going on right here. Okay. All right, so we're going to move on to a very hot topic, but a topic that we're kind of getting tired of because everyone's talking about ESG, right? And every fund manager, product manufacturers talk about ESG.
Okay.
So we hope to have a deeper conversation later. I see Jessica, who's going to moderate, fantastic moderator and leader in the field, with guest speakers who are going to be fantastic. But how do you see it? This
first time I'm feeling very cold. Jessica also can squeezing. So that's the first ESG thing to fix this place. Switch off this aircon.
Yes.
Okay.
Spend less on aircon.
So that's the ESG problem to start looking at. Okay. On ESG.
Specific to maybe investing.
Yes.
And the space of fintech and wealth.
Okay. I'll come to the fintech. You got to. I think for us, we got to think where to invest. If only 5% or 8% of global industry which pollutes in some way have access, are technically called as the green companies.
Yep.
We have 90% of companies who don't have access to any technology,
yep,
which can help them to either reconfigure their systems or processes or move to alternate paths. So we have a huge gap in the real sector who needs massive investment so that they can change the way they do things today. So there's anyways huge gap out there. And for banks to redirect that capital to this sector is one thing. For regulators to expect banks to disclose their capital reallocation is separate thing. But who is going to build those technology for this sector, whether it's energy sector, transportation sector, agriculture sector, to have access to such technology, which will help them to be less carbon intensive. And those companies needs access to capital. They needs investment. And these are the real future growth investment asset where the companies will make us green. I think that market is very, very underdeveloped today. In fact, we don't know who are these people who can fix things.
Right.
So our first effort is now to figure out, to find a marketplace to get them, at least to trace them and figure it out how to have a dialogue with them by sector, by real sector, and see whether we can allocate investment fund to them. That's stage one. On the stage two of this problem is the classic regulatory ask. Disclosure, taxonomy, looks fancy. Disclosure.
They'll explain later.
Yeah, you can explain. They're all in the books. So this is all how to get it right so that we can read this report, look at the data. The challenge in the step two is the data itself. And I was in ASEAN market last whole week. I can tell you it's very challenging to get good data set to really do a good disclosure provenance on these processes. So having access to good data set in the market around us is the second challenge we go to work and fix it.
Right.
And the third piece is all education piece. And I think there is one argument saying that consumer can change the behavior, but it's very, they have small leverage in this process. Very little you can do.
Yeah.
You can do some cute stuff, but very little you can do in a large scale way. So for us, it's the primary target to go and build the infrastructure to figure out these companies which will look for solutions who will fix this real sectoral challenge. Yeah, beyond that, I think, so that's the first 1, 2, 3. Why fintech is a big question. In fact, it's an accidental opportunity for us as a fintech because think about payment fintech. They process every good behavior in the world. And I don't want to be expansive what good behavior means, but you can look at the payment data and you can figure out who is putting money where, who is buying what is driving the economic growth. They have rich data set to really help us to build models in terms of measuring and monitoring the impact. So payment companies payment fintechs by design can be find a reinvention about themselves and call us green fintech. Of course, attract more capital now, so that they will play a key role in this process. Company like yourself, you can actually provide far more richer insights to allow people to think about moving their own investment choices so that can be an incentive for sector to think differently. I was reading the report, there's chapter there in that report about how a company like yours are thinking about incentivizing investors to invest on those assets. So that will be a good way to go look at this. So this is broadly what we are doing, but I can tell you, I don't want to be caught between disclosure and registry and as the biggest achievement we have in the ESG space. We have a long way to go. And I mean, I was in Philippines, 60 or 100 million people. They don't have access, some people don't have access to electricity. What green we're talking there?
Precisely.
So there has to be a transition which makes it palatable.
At everybody's own pace, depending on their needs. I guess that leads us to the wealth tech conversations because related to that, there's like 1,000+ fintech companies here in Singapore, and there's been tremendous funding. KPMG report again, massive growth in funding, but there's also some headwinds that we face, whether it's the lack of talent. Especially engineering talent, we have to fight with huge, big companies, regional, companies, and the gap with all the other regions in terms of that capability is narrowing very rapidly. Right. So, what can Singapore do? The talent side, especially, but is there other areas where I think we can help nurture the ecosystem to scale better and faster?
Let me give a funny story. In sitting in Singapore, we talk about how talent can come to Singapore. We have recently announced a very progressive EP pass or the tech pass, all these things.
Right.
And I was in Philippines. I met this big company, big bank CTO. His opening remark is how to work so the talent don't leave Philippines. So market is thinking opposite to what Singapore is thinking. So Singapore is thinking how to bring talent. Markets are thinking how not to let the talent get to Singapore. So
especially Hong Kong these days, I heard.
So there is this massive conflicting interest in the talent space, which is good for talent. And so I was speaking to this CTO from a large bank in Philippines. They told me that they're now going to match up compensation what they used to get in Silicon Valley in Singapore as a first incentive. And to do that, they were getting very creative. They said, we're okay for the chap to have 2 jobs so that they can get the same salary. This is the extent they want to go to have access to talent.
That's flexible working.
Not only you don't have to spend a lot of money to match up to the salary, you're open to the idea that the employee of yours in tech has 2 jobs to 1 night job and 1 day job. So they get both the compensation, they do better than what they get outside here. So what I'm trying to say, that talent is what is really out there. I think we got to do better in the way we attracting talent, not only have a more progressive talent pass, working pass, but also have good jobs. You can't bring them to Singapore and give them a paper shuffling tech job. They go to write real stuff. They have to write code. They want to have a good project. So having good work, also the second layer, which I think industry collectively have to work hard. So not only we get the best talent, they also do good work, good projects, which will at least good look in the LinkedIn profile. They've done a really good job. And also we'll get them to speak at the Singapore FinTech Festival.
That's right.
And the EWC conference here. So one is be open about global talent coming to Singapore. Be open about some of the policies around how to make it flexible for this talent to be more multimodal in that sense, and also have good jobs for them. We are very sure that there'll always be a big gap. And the answer to that is not more salary. I mean, that is good for a lot of people, for me also. But that's not the right answer, that you can always compensate for talent gap. Because people really want to go back to wherever they came from. They want to make an impact, especially the programmers who are in 40 plus. They are not interested only money and work. They want to also give back. They want to make a real impact in the country where they come from. So you will see a lot of reverse talent going back to this country, which is a worry for us, also not a worry, because we are happy to work collaboratively. If you have endeavors here and you have a center in Philippines, work together. Absolutely. We don't have to have every talent sitting in Singapore doing the job. We can have a network of collaboration and this opportunity to work together. So collaboration, perhaps the ultimate answer to this talent issue. It cannot be a single center has access to all the best talent sitting physically in Singapore. Not possible.
Absolutely. Actually, I have a good story to share with everybody with regards to SOP. When I was at Morgan Stanley, before I left, I went to a Goldman Sachs TechNet conference, which is an annual conference in Hong Kong. And this was back in, 2016 or soon after you joined?
I tend to forget all my statements.
Yeah, you'll deny it to the end, but I'll tell you what happened. So I attended the conference, and I was still at Morgan Stanley, and I saw this new fintech guy dressed like this in jeans and a shirt and a jacket, I think you had, with a Hong Kong fintech person head. And you guys were talking, and they were sharing good insight, both sides, but then Sop was saying how he's created a WhatsApp group in Singapore, where all the fintech leaders and guys come in and they chat and they can share grievances.
And they abuse me.
Complaints, abusing SOP right on that WhatsApp. And then he said, okay, and then he's decided maybe we should invite them to MAS. So we had some wine, we had some, drinks, and we chatted and had this engagement. And the Hong Kong guy, his response was, he said, are you guys allowed to have alcohol in your office? That was the extent of innovation that he was excited about. So I'm not trying to bash Hong Kong, but this is a problem with a lot of regulators, and why SOP was so refreshing when he came to the scene, because he's from the private sector, right?
No,
and within this context of fintech, I think, so you're going to say something?
No, I think that I tend to forget all this incident, because Hong Kong is still a great friend of ours.
Yes, of course.
Yeah. We want everyone to succeed, because as I said, the talent is an issue. Not a single center can access to all talent.
Yeah, but that was my point, that actually it's about being open-minded, being flexible, being collaborative. There's a way to solve the problem if we can just look beyond just territorial. It has to be all based here in Singapore, has to be homegrown companies only, it has to be Singaporean founders only. So if we can be a bit more open and flexible.
And I asked the CTO that what you're doing to stop people going to Singapore. I asked that question last week.
Yeah.
And he had a lovely long answer, but not for today.
Which leads me to the next topic, which is a lot of discussion. And we had a media session this morning with some media people.
There's no media here, right?
Maybe they might have squeezed in, but it's okay. You don't care anyway. I know. No. But there's nothing off the record, Sop, anymore.
Yeah,
this is on YouTube.
Oh my goodness.
But I was going to lead to Web3, DeFi, next-gen, crypto, that whole space. And to be honest, in my view, and I look at the whole fintech space, MAS has done a fantastic job in nurturing the ecosystem, and yet be a good regulator that has protected investors and retail investors and individuals in particular who need that protection. So you've found this good balance, but this is a space that's still nascent but exciting. A lot of people are involved. A lot of people have lost money. They should have just put their money in Dallas, but that's another story. But just generally, what are your thoughts, and where does the future lie? Is this a pause that refreshes, or the end of?
Is the last question or the second last question?
There's one last one on education. And
I'm looking at the time.
Yep.
Okay. So, well, Ravi Menon just made a policy, not a policy, a clarification speech on where we want to go. We have broadly one or two areas to focus on. I think we're going to support digital asset growth, no doubt about it. And in our mind, there are two big buckets in this space. One bucket is what we call as a fungible assets, cash-like. There's a cryptocurrencies, private currencies. There's stable coins. There's central bank digital currencies. There's a tokenized deposit or banks issued cryptocurrencies equivalent. I think cryptocurrencies, our stance is very clear. We don't know why it exists, but there's a lot of speculation. Stay away from that. Very bad area to go and think about it. But we do recognize there's a need for a digital currency because in the Web 3.0 design of the future, you need a new form of money which can allow you to buy and sell things on the marketplace, which is in a way a payment instrument and a contract of ownership transfer happening in a single transaction. For that, you need a new form of money, and digital currency is a way to do it. Whether it's a stable coin or a central bank issued currencies, or it is bank issued digital currencies, we need some of them to be part of that process. On the opposite side, on the marketplace side, you have the whole range of non-fungible assets, which is nothing but what you are selling today, asset ownership, whether it's a bond, security, equities, real estate. In this new world of Web 3.0, there's a new ownership construct of how to own this asset, which is a distributed way. And I think that market will grow, and we are happy to see whether some of the wealth tech firms are going to focus on that asset class and see where it goes. So we got to recognize that. We got to find a new form of money, which is safe, which act like a real currency, and then they can transact and allow people to buy these assets, which is the non-fungible assets, which represents all the real economy assets as in different ownership design. So that's our view. I will repeat again. We are very, very serious on our stance on the speculative aspect of cryptocurrencies. We are strongly advising retail investors to stay away from it. It is just a disaster. You've got to stay away from that. So that's our view.
Yeah, related to that, and it's related to the financial literacy topic that we're discussing. The top question among the audience is, how does MAS intend to regulate fintechs and $0 brokerages where many fees are not transparently displayed? And then there's another question, should the MAS introduce the legal definition of fiduciary duty to the FAA, similar to the US, so financial advisors have to legally protect client interests? A lot of this is kind of related, and how can we use technology to improve this?
It's a good question to have some policy stance on that. I think very good questions. If I can have access to the question after this, we'll take it and we will try to make something out of this. I think broadly speaking, I think the whole literacy part of this, especially if you are going to democratize access to wealth to more people, I think you got to start thinking seriously about literacy. And every time somebody says, how a digital bank going to make money, I said that you cannot make money by processing payment, is out of question. Your ability to make money by lending or digital finance is getting maxed out because huge competition. What really going to make digital bank profitable, which we are not sure, because based on what...
There's a question on that. What advantage regulations does digital banks have over the competitors?
Yes, so the only way in my mind, it's my view, not MA's view, is to figure out how to be a more efficient distribution channel for affordable wealth product, affordable insurance product, affordable pension product. That today banks just don't do it. They don't call after 3 years. So forget about calling for a micro wealth product. They'll never call for the rest of the life. So having an opportunity for a digital bank to work with a company like yours, so we are okay, 2 minutes. So having that opportunity for the digital bank to offer this 3 set of product, insurance, wealth product, and pension, on top of lending, on top of payment processing, is the way to go.
Absolutely.
So we have 20-odd digital bank licenses issued in Asian market. All are going to compete. It's a perfect storm for all wealth tech company. Go and talk to them, find a way to partner with them, make them the most successful banks ever we produced in the sector.
So that is really important because the banks, even digital banks, are focusing on areas which are not really wealth. So it's really the day-to-day.
So if I have to, if from year from now, if I have to look at all the digital banks, I want to see how many of them have partnered with wealth tech companies for the wealth side, insurance side, and the pension side. If they get it right, they will get it right on a long run. If they're going to be obsessively focused on doing lending, God bless them.
God bless them. And that's interesting because, we can't disclose names, but we have been approached by digital banks to collaborate across the region.
Please.
And you can see that only the guys that are really thinking through their business model and preparing for their future are the ones that have really thought this through and approaching us. So that's interesting to hear.
We are done.
Yep,
0, 0,
that's
0.
right. So I was going to wrap up anyway. Thank you guys for listening. Thank you, Sop, for being here with us with really insightful, frank, open discussion.
Thank you, everybody.